I did say this is the Forex week. So if you want freedom, you want flexibility, you want cash flow, you want some more side hustle, you want some more money in your account, this is the place to be, guys. So welcome back once again here at MoneyMatters. Remember, we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom, guys. So one of the ways you can assure yourself of financial freedom is by making more cash flow so you can invest for the long term. Remember, long-term investing, always. I talk about long-term investing all the time. I'm not those Forex traders who will tell you to make quick money, spend it, and then make again because you always be making it, right? No. I am always saying you never know what will happen in the markets. You never know what will happen with Forex trading. You never know when you will lose a lot of money. But if you have a good foundation, which is basically having long-term investments, then you can easily make money and grow wealth using Forex. But if you're just using it as a tool to make quick money and spend it, most of the time you don't succeed in this trade. This trade requires discipline and focus. So guys, last time I said, number one, I always say this is just a side hustle. It's not an investment. It's not a long-term investment, but you can invest in Forex. And I said how? You can invest in Forex by ensuring that you hold your position for much longer. So if you're looking at it, depends on the time horizon, right? So if you're looking at years and so, the pound will be stronger than the dollar will be stronger than the pound, the dollar will be stronger than the AUD. You can do that and you can invest in that. That's fine. You're just investing in the Forex market like someone would invest in the stock market. But because Forex is very volatile, very liquid, it's hard to determine. You have to be like George Soros, do your research, have a bit of insider knowledge, and you will always succeed. But I always say, why take the hard route if there's the easier route, which is make money with the liquidity and the flexibility, invest in long-term stuff like stocks. Easy peasy, right? So guys, let's get into it. Last time we spoke about support and resistance and how you can improve your trading just using those two indicators. They're actually not indicators because they're not automatic, really. They are things you just plot, price reaction areas that you plot on your own. Indicators are already on the platform for you, so you just basically click on up and here's your indicator. That's the difference. So last time we spoke about support and resistance. Let me know if you got some useful points out of it in the comments section below and what you want us to talk about in the next videos with regards to Forex or finance. Anything you want, guys, anything you want. Even these Forex videos were suggested by most of you guys, so thank you. Let's move into today's video, which is basically moving averages. The reason I've done both support and resistance and then moving averages is because they can be used together. And I always use them together in my trading. Actually, these are the only things I use. So if you know about my trading strategy, if you've done some training with me, you know I don't do so many indicators. I do very few indicators, and when necessary, most of the time I do what we call naked trading strategy, which works perfectly well because I get so many confirmations. I don't want to clutter my chart with so many indicators. I can see the chart and I can tell where the price is likely to go based on support and resistance, things like moving averages, chart patterns, candlestick patterns, and so many other things that I can just see because I've done it for so long. Again, I also know the pairs I'm trading, so I can know the movement of that particular pair. I know their movement in correlation to other pairs, so that also helps. That's why I always say, come for one-on-one coaching. You will always get this information and you will be trading so seamlessly. You'll be like, why did I have to go to a class? Classes don't work. They're for general information. You will get the general information. But for you to be successful in trading over time, consistent, be among the few, let's say 2%, you must master your personality, master your emotions, be disciplined, have a mentor, someone who can actually tell you, okay, I'm with you right now. I'm focusing on what you're doing. I want to see where you're getting to from this point. Someone working with you one-on-one. And that's what I do, right? So guys, how can you use moving averages to improve your trading the same way you use support and resistance? And you can even use both of them. It doesn't matter. But if you just want to focus on moving averages, what's a moving average anyway? Just from the name, you could tell. It's just getting an average of the movement of the market. So it takes the average of what has happened. So if it's a 10 moving average, it takes the 10 previous closing prices and divides by 10 and gets an average, right? If it's 20 moving average, you know it divides by 20. If it's 10, divides by 10. It looks at the closing prices in the last 20 days and divides by 20, gets a moving average. So there are two different types of moving averages. We have the simple moving average and the exponential moving average. Remember, this is a trailing indicator, so it's not showing you before it happens. It's using data of what has happened to try and follow the trend of the market and determine what will happen, but it doesn't show you. It happens after, so you cannot really use it. It's not a lead indicator. If you look at the simple one, it looks basically at the 10 last closing prices. The exponential moving average usually takes more recent price movements. So the simple one takes a bit historical, a bit old. Exponential one is taking into account the most recent movements in the market, and it gets an average. The same way the simple one gets an average. The difference is the simple one is looking at a bit of historical movements. The exponential one takes into account the more recent ones. So it depends on which one you want to use, depends on your trading strategy, what your objectives are and what you want to achieve, and the time frame you're trading on anyway. So let's go to my laptop and let's look at some of the moving averages that you could actually use and how to use them. You can use them to plot the trend, to know what is the trend of the market. You always want to know what's the trend of the market. They're very good for showing that. Number two, they can also show a reversal, a change in market. So the market could have been going down for a long time or for a period of time. Then it reverses and wants to go up. You can plot a reversal by the moving averages crossing each other. That can be a sign of a reversal. And of course, the most important one for me is you can use them as dynamic support and resistance. So remember, we spoke about support and resistance, which were lines. You can use moving averages as support and resistance, but these ones are dynamic in that they're closely following the market. So they are dynamic. They're not just straight lines. They are following closely what is happening in the market. Let's jump in. So remember, we can have different types of moving averages. There are different numbers. Remember, it's just taking the last closing prices and getting an average. So you can get an average of any number. Most of the time, people use 20, 50, and 100 or 200. Personally, I use 21, 50, and 100, depending on what time frame I'm trading and what I'm trying to achieve at that time. But again, it also depends on the market and what I see on the market. So there's no one size fits all. Use what is good for you. You can also use 10, 20, and 50, like it is here, which is very straightforward. Depending on the time frame you're trading, you can try them out, see what fits well for you, what works in that particular market condition, because sometimes some just don't work. This will not happen all the time, guys. So as you can see here, these are the daily moving averages. This on the daily chart. You can see the 10 one is closer, and the 21 is full, and then the 50 exponential moving average. This is exponential moving average. Remember, I said there are two. There's simple, there's exponential. So this one is taking more recent price changes in the market. And you can see, so how can you use it? Number one, you can use it to plot the trend. Here you can see from up here, they are showing you clearly that the trend is downwards. So this is another one way of using moving averages. You want to plot the trend of the market. You can clearly see without even drawing anything that the market is trending down. That's number one use. So you can see, again, the trend also depends on where that particular moving average is. Usually the smaller one is inside and then the bigger one's outside. So in that sense, you can tell if the 10 moving averages is inside, then you know that the market is trending which particular direction, right? So let's come here. You can see, again, a very clear trend. You can see a very clear trend. And the second use I mentioned was when they crossed over. You can see they were moving down, they crossed over around this point, crossed over, then started going up. So initially there was a small pullback here, and this is the 4 hours. So there was a small pullback, and immediately they crossed over. You can see what happened. They crossed over around this point. You can see it moved all the way up. And now they have crossed over at this point. You can see a pullback. Now, it will depend on other confirmations before you decide to go down on this market. Definitely, you don't want to just use the moving averages. But you can see, number one, it has shown you the trend very clearly. Number two, it has also shown you the crossover of the reversal very clearly. And number three, you can see it's obeying. When you say obeying, it means it's following this particular moving averages. So it goes up, comes back and rests on the moving averages area, goes back, comes back and rests on the moving average area, goes back, comes back and rests on the moving average area. That can be a very nice trade entry for most people. So if you determine the trend, you've seen the movement, you wait for it to pull back to the moving average, wait for a good signal to enter the market, and be disciplined and patient to wait for your trade to happen. Okay? So I said three things. It has shown reversal, it has shown trend, it has used it as dynamic support and resistance, and that's how you use moving averages to improve your trading. So this combined with resistance and support that we drew makes your trading really easy and really effective and efficient. Guys, use these things when you're trading forex market. Forget about those crazy stuff that you use to indicators that you use to make money. So as you can see again here on the daily, this is the 10 exponential moving average. You can see very well how it's obeying this, and when it changed, you can see, and when it changed, you can see how the movement went. So very nice. Again, the 10 exponential and the 50. Usually the daily time frame or the bigger time frames obey the bigger moving average. Of course, it makes sense that way, like mathematically. You can see the reversal here, and you can see what's happening. Again, very nice 10 moving average. Now sometimes it doesn't work. You can come to a very choppy market, and you will see a live market right now. This is just to show you how they cross over, how they can be used as dynamic support and resistance, and plotting trends, and so that's why I wanted to show. So let's come here and show you somewhere where you may not have to use them. So for example, let's say you are not using this particular moving average, which is the 100 moving average, this on the daily. The 100 moving average is doing well, at least at some point it was, but then you can see very well that it's too choppy. The market is too choppy. I don't trade such markets because it's very difficult to determine. If you're not if you don't want to waste your time to wait into the market, don't trade such choppy markets. Yes, it's trending up, but it's very choppy. So you can see very well it has obeyed this one for a period of time, but not for a long time. It was obeying this one, so at least it gives you the trend on this one. So I'm just telling you that if it's too choppy and crossing over the moving averages too much that it can't really determine anything, don't use the moving average. You don't have to. All these indicators should be based on how the market looks at that particular time. So let's find another moving average. This is the one we drew earlier. Let's see if we can have our moving averages here. Moving average, and I don't know. That's the simple one. We can use the exponential moving average, which I like. This is the 20 and the 50 moving average. I can edit them out. I always like 21, 50, and I want to see the 100 too, and apply. And you can now see. So it could be that it's more obeying 21, it's obeying the 50, it's obeying the 100. So you want to see which one is going to work best for you. So this one clearly shows me the trend of this market, very clear. You can see the trend. I can also see how it's using this one as support and resistance. So guys, you can see very well that you can use this one as a moving average. It's showing you very well the trend of this market. It's showing you that it's touched the moving average more than once. And you can see if you use it with the support and resistance, how good it can be. More confirmation, always a good sign for you guys. So this clearly shows me how the market is trending. It clearly shows me which moving average is the market obeying. It clearly shows me when it changes and it reverses and wants to go up with all these crossovers. So this is an amazing one already. So this is just on the AUD/USD that we used last time, that we used on our last video for support and resistance. And you can see how much it's also obeying these same things. So if you are using these two, just moving averages and support and resistance, you're already trading quite well. You can make money with just these actually. And that's how you start making money with forex trading. You don't have to learn crazy stuff, lots of complex indicators and stuff. It's very simple, really. So always use the moving averages to trade the markets. This is GBP/USD and AUD/USD usually are correlated, so I don't want to try that one. Yes, this is a nice one. Again, this is a clean one because it doesn't have support and resistance levels. So you can see very well, clearly showing the trend here. It tried to cross over here, but it didn't cross. It's been a downtrend market for a while. Then when it got here, you see what happened? Crossover, 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 and see what happens. Changes, starts going up. So this moving average can always show you different things. Can show you the trend, can show you the points in which the market is obeying the moving averages. So you can use those points as the entry points. It can also show you the reversal, which again, you can use as an entry point if you have other confirmations. So if you had a support level here, you see the moving average is starting to go up. it's a confirmation to you that, you know what, this market is reversing and I'm in a position to trade it up. You know, that's how you use moving averages to make money in the Forex market. No hassle, easy peasy stuff. Easy peasy stuff. Make sure you always trading naked. Trading naked means you don't have too many things on your chart. You don't have, I don't know, Bollinger Bands or some oscillators, directional, whatever, Ichimoku, all these things. Now look at this chart. Look at this chart. How do you even get to read the prices? What matters in trading is the price. So if you have this chart, how will you get to read prices? How will you make money with this kind of chart? Forget about these things, guys. Forget about them. They don't help you. They will just make your trading more difficult, frustrating, tiresome, because you're looking at a very busy chart and it's just not working. Trade easy, make money. As you can see, I don't do any dirty stuff here. Right now I'm trading which one am I? I'm trading this one. Nothing is here. Nothing apart from the pivot points. Two moving averages, 21 and 50 as usual. And you can see the money. Anyway, guys, see you next time. Thank you for being here, and comment, share, and like. Move around, fresh brush when the school is out, when the